Small business loans in Fresno, California, how to apply and win. Hello everyone, my name is Jerry and welcome to this video on unlocking financial solutions for small businesses in Fresno, California. Whether you're looking to get your startup off the ground or expand your existing company, access to capital can be a major obstacle. But the good news is Fresno offers a thriving landscape of financing options for local entrepreneurs like you. In this video, we'll explore the types of loans available, how to choose the best fit for your needs, insider tips to secure funding faster, and real-world examples of small Fresno businesses that have successfully leveraged loans to grow. So if you're ready to turn your business goals into reality, let's dive in. Overview of Fresno's business environment. First, let me provide some context on the economic environment here in Fresno. As the fifth largest city in California with over 500,000 residents, Fresno serves as a major hub for agriculture and commercial trade in the Central Valley. Key facts about local industry include nearly 30% of all U.S. agriculture production originating in Fresno County. Home to one of the busiest airports and railway centers in the western U.S. Median income of $57,000 and unemployment around 7%. For entrepreneurs and small business owners, this blend of agriculture, logistics, and growth in sectors like healthcare, education, and technology create ample opportunities. However, many struggle with limited access to funding and capital to turn their ideas into reality. That's where strategic financing comes into play. Types of small business loans in Fresno. Fresno offers a range of debt-based financing solutions to meet different needs, from short-term working capital to long-term commercial expansions. Major loan types include SBA loans. Backed by the government and offered through local banks, SBA loans provide affordable terms and less stringent eligibility requirements. For example, the SBA 7R loan program offers up to $5 million with low down payments. Bank loans. Conventional business loans from major banks like Wells Fargo and Bank of America fund amounts up to $100,000 to $250,000. Approval is based on criteria like personal credit scores, collateral, and financial histories. Alternative loans. Offered by online lenders like Cabbage and Can Capital, these loans rely less on FICO scores and instead assess business sales, shipping data, and other real-time information to extend up to $250,000 quickly. The application process can take as little as 10 minutes with funding in 1-3 days in some cases. Just be prepared for higher interest rates given the expedited nature. CDC loans. CDC 504 loans administered through regional certified development companies allow for 90% financing on major commercial property projects with low 10% down payments. Ideal for expansions. Microloans. Catering to very early stage businesses, microlenders like Fresno CDFI provide loans up to $50,000 with more flexibility than traditional sources. Helpful for working capital or equipment purchases. With this range of options on the table, let's look at how to narrow down the best fit. Choosing the right loan type. With several loan varieties to evaluate, follow this process for determining the most suitable match. Step 1. Outline exactly why you need funding and how much. Define what you will use capital for and in what time frame. Step 2. Consider the health of your personal and business finances. This helps gauge what level of risk or complexity you can assume. Step 3. Map loan features like maximum amounts, terms, rates, origination timelines, and eligibility criteria against your needs and situation. Step 4. Research actual lenders offering your top-aligned loan varieties, submit inquiries, and compare real offers side by side. While the landscape seems vast at first glance, this funnel approach helps narrow options effectively to find financing that bridges the gap standing between your company and its highest potential. Now let's demystify a bit of the application process itself. Demystifying the loan application process. While every lender differs slightly, you can expect a version of the following when applying for small business funding. Step 1. Initial application. Prepare basic details on your funding needs, company overview, operations data, and contact info. Many lenders now offer online applications taking as little as 10 minutes. Step 2. Document submission. After initial review, underwriters will request past year's tax returns, bank statements, financial projections, business ownership information, licenses, insurance policies, and other supporting files. Remain diligently organized. Step 3. Follow-up discussion. A loan officer may schedule a call to clarify aspects of your application, discuss next steps, or request additional documents. Transparency and quick communication prevents delays. Step 4. Application decision. The underwriting team completes due diligence and decides on approval or denial with proposed terms if successful. The decision timeline can range from days to weeks depending on lender type. Step 5. Finalization and funding upon approval. Formalize final agreement, sign loan documents and complete any closing requirements. Then receive your loan proceeds and put the capital to work. Now let's look at exactly how to put new financing to work effectively. Strategies for using loan funds wisely. With fresh capital secured, avoid the common mistake of vague allocation by grounding use cases in data. Follow this precision approach. Step 1. Quantify business gaps. Use revenue trends, customer feedback and market analysis to spot specific weak points limiting growth. This identifies areas for investment. Step 2. Research potential solutions for each growth constraint. Outline tangible solutions and associated costs. This quantifies what resolving challenges entails financially. Step 3. Rank initiatives by impact. Consider factors like revenue potential, timelines and cost-benefit ratios to determine ROI on proposed projects. Rank based on outcomes. Step 4. Fund top initiatives. Allocate majority shares of capital infusion to solutions expected to drive outsized impact. Fund secondary projects in phases upon confirming success. This focuses loan dollars where they matter most. Now let's look at real Fresno businesses doing just that. Local business success stories. Hearing first-hand stories from fellow entrepreneurs using strategic financing to excel reinforces what is possible. Let's look at 2 brief examples. Local restaurant pivots to drive-through. Faced with indoor dining restrictions during COVID-19, the owner of Fresno-based Maria's Mexican restaurant used an SBA Economic Injury Disaster loan to convert his site into a contactless drive-through operation. The flexible financing allowed the 30-year establishment to retain employees and ultimately increase revenues by 25% post-pandemic. Youth sports company expands headquarters. Leveraging a CDC 504 commercial property loan enabling 90% financing with only 10% down, Youth Athletic Services purchased and renovated a 10,000 square foot office complex to accommodate their growing coaching and tournament management firm. The new site with dedicated training facilities positions the company for regional expansion. As you can see, the strategic use of funding catalyzes growth for real Fresno small businesses. Now let's recap the key takeaways. In closing, accessing financing provides the fuel for Fresno companies to turn aspirations into actualities. From versatile SBA loans to speedy alternative offerings, convenient online applications to large CDC-backed projects, tailored solutions allow you to overcome specific barriers. Strategically aligning capital with your highest potential initiatives maximizes impact. And proactively managing repayment ensures stability. So as you look to elevate your venture to the next level, leverage the full breadth of funding opportunities around you. Local Capital stands ready to serve your vision. If you found this video helpful, please like, share and subscribe. Until next time.